How to trade with hammer candlestick pattern. Hammer candlestick pattern are one of the most used pattern in technical analysis, not only in crypto but also in stock, bonds and forex trading. Hammer candles can help price action traders spot potential after or trade trends. Depending on the contact and time frame, these candle pattern may suggest a bullish reversal at the end of download or a reversal after an uptrade. Combined with other technical indicators, hammers candle may give trades good every point for long and short position. The hammer candle include the hammers and inverted hammers, which appear after a downtrend. The variations of hammer candles include the hanging man and the shooting star, which occur after an uptrade. How do candlestick work? In a candlestick chart, every candle relates to one period according to the time frame you select. If you look at a daily part, every candle represents one day of trading activity. If you look at 4-hour chart, every candle represents 4 hours of trading. Each candlestick was an open price and close price that from the candle body. That also have a wick or shadow which indicates the highest and lowest price within that period, which is a hammer candlestick pattern. A hammer candlestick is formed when a candle shows a small body along with a long lower wick. The wick or shadow should have at least twice the size of the candle body. The long lower shadow indicates that sellers pushed the price down before buyers pushed it back up above the open price. Below you can see opening price 1 and closing price 2 and the high and, and low that form the wicks or shadow 3. Bullish hammers. A bullish hammer candlestick hammer is formed when the closing price is above the opening price, suggestion that buyers had control over the market before the end of that trading period. Inverted hammer candlestick pattern. An inverted hammer is formed when the opening price is below the closing price. The long wick above the body suggests where was buying pressure trying to push the price higher, but it was eventually dragged back down from before the candle price. While not as bullish as the regular hammer candle, the inverted hammer is also a bullish reversal pattern that appears after a download. Bearish hammers. Hanging man and candlestick. A bearish hammer candlestick is known as a hanging man. It occurs when the opening price is above the closing price, resulting in a red candle. A bearish hammer indicates that the market experiences selling pressure, which suggests a potential reversal to the downside. Shooting star candlestick. A bearish inverted hammer is also called a shooting star candlestick. It looks like a regular inverted hammer, but it indicates a potential bearish reversal rather than a bullish one. In other words, shooting star candlesticks are like inverted hammer that occur after an uptrend. They are formed when the opening price is above the closing price, and which suggests that the upward market movement might to opening at the end. How to use hammer candlestick pattern to spot potential trend reversals. Bullish hammer candles appear during bearish trends and indicate a potential price reversal, marking and button of a downtrend. In the example below, we have a bullish hammer candlestick A bearish hammer candlestick can be either a hanging man or a shooting star. These appear after bullish trend and indicate a potential reversal to the downside. In the example below, we have a shooting star. As such, to use hammer candlesticks in trade, you have need to consider their position in relation to previous and next candles. The reversal pattern will either be recorded or confirmed depending on the content. Let, let's take a look to each type of hammer. The hammer, the hammer candlestick pattern, strength and weakness of the hammer. Every candlestick pattern was its pros and cons. After all, no technical analysis tools or indicate can generate 100% profit in any financial market. The hammer candlestick chart pattern tends to work better than combined with other trading strategies such as moving average, trend lines, RSI, MACD, and finance strength. The hammer candlestick pattern can be used to support trend reversal in the financial market. Traders can use hammer pattern in multiple time frames, making them useful in both swing trade and day trading. Weakness. Hammer candlestick pattern depends on the context. There is no guarantee that the trend reversal that occur. Hammer candlestick pattern are not very reliable that themselves. Traders should always combine them with other strategies and tools to increase the chance of success. Hammer candlesticks versus doji. What is difference? Dojis are also like hammers without a body. A doji candlesticks open the closes at the same price. A doji candlesticks open and the closer at the same price, while the hammer candlestick indicate a potential price reversal. A doji usually suggests a market indication for it. Candles are often neutral pattern, but they can decide bullish or bearish trends in some situations. The doji like a hammers or hanging man without body. The doji is similar to an inverted hammer or a shooting star. Steel hammers and dojis don't say much on their own. You should always consider the concepts such as market trends surrounding candles, tra- trading volume, and the other metrics. Closing thought. Although the hammer's candlesticks pattern is a useful tool that helps traders spot potential trend reversal, these patterns always unnecessary a buyer or sell signal. Similar to other trending strategy, hammers can also useful then combined with other analysis tools and technical indicator. You should also make use of proper risk management evaluation the reward ratio of the trades. You should also use stop loss offers to avoid big losses in moments of high volatility.